Let's start off with what's been happening in China. Quite interesting, 6.7% down yesterday. For the month of August, down 22%. But we've got to appreciate that the Shanghai Composite has gained almost 80% over the last 7 months. Is this purely a correction in your eyes?
I think it is. As you rightly say, it's had a huge run since the beginning of this year. And nothing goes on forever. And I think yesterday was probably seen as being a good day to take profits again. Because Asian markets, as we know, opened up weaker on the back of the lower consumer confidence figures coming out of the US. And as a result, things I think generally went lower yesterday. So yeah, probably profit taking on the back of that not so good sentiment.
We've also seen quite a lot of IPOs hit the Chinese markets, and there's also concerns about softer credit extension in that country as well. Do you think that perhaps could trigger even sharper sell-off from here?
I don't know. I'd be surprised. I mean, if you look at the fundamentals in China, they're actually looking very good. Okay, yes, we saw a lot of stockpiling of commodities, for example. China, what it's trying to do is do more of what India is doing, in the sense that it would like to have a greater proportion of inward industrialization compared with exports per se. And that means it's got to keep its industrial production high. So, I say fundamentally, I think China's looking awfully good. And the stock market, I think, is just really reflecting that. So I wouldn't get too carried away with what's actually going on in the stock market at this point in time.
Turning our attention now to South Africa, lots of economic data out yesterday. Trade balance coming in positive territory, quite a surprise to the market. Also a very volatile number, up 0.4 billion rand in July at this stage from a previous 3.2 billion rand in June. So quite a big difference from the previous month. What do you make of that number? Do you think it's sustainable at these levels?
Yeah, as you say, it's very volatile. Excuse me. It's you can't really make too much out of the trade balance. I mean, I think the official forecast was somewhere like 400 million the other way. And it's the third positive trade figure in 3 months. So it's looking good. I think of more import is when we get the current account balance figure to see what's actually happening on that front. We're still sucking a lot of imports to sustain this infrastructural boom. But the fact that the trade side is actually going quite nicely, it is encouraging. But I would take it no further than that.
Would you say it's on the back of stronger imports rather than exports at this stage?
Well, look, as I say, the import situation it has to remain high, because the infrastructure boom that we're now experiencing, a lot of that revolves around imports, some particularly high-tech imports. I'll tell you what's interesting on the current account side is the fact that we're perhaps seeing lower outflows in terms of dividends, because we saw a sell-off last year in terms of foreigners buying our equities. They didn't buy so many, and there was a big sell-off in bonds as well. So bond payments and stuff like that, and dividend repayments definitely down. But that doesn't affect these figures. That was purely a trade balance situation.
Looking at the money supply figures and also the PSCE numbers, any clues about where we're going in the economy? Because obviously credit extension here in South Africa and demand for credit still looking very weak.
I think this just backs up what we're seeing in some of the other high-frequency indicators. It's again telling us that the economy is cooling down very, very rapidly. The demand for credit is waning at a rate of knots. I think what also comes out of these figures is that there are some positive aspects. Credit demand is coming off, but things like, for example, the affordability of housing is probably now getting to the point where house prices have come off, demand is coming off, but that affordability is looking as if it's a bit better. So I think by the end of this year, we should probably start seeing a tick up in house prices as well, maybe even into the first quarter of next year.
Analysts I spoke to yesterday say regardless of where the Reserve Bank and the MPC cut interest rates to, even if they cut to zero, we just don't have that kind of demand for credit at this stage. Do you think that they're right to say that? Or, at this stage, you've also got to know that banks aren't really that willing to extend loans.
Yeah. Look, I think we also have to bear in mind that South Africa, it's not unique in this regard, but it's a bit different to many other countries around the world. We have had no fiscal stimulus whatsoever. So we're relying purely on a reduction in interest rates to try and promote improved demand. And if that demand isn't coming through, then it just means it's going to be longer before the economy actually turns. But I'm fairly sanguine that in fact it is having an impact. I still believe there is pent-up demand in the economy. that will at some point in time, probably towards year end, start materializing in the form of better demand, for housing loans, for car loans, and we may even start seeing the dreaded NAMSA figures turning up at long last.
Earnings season well underway in South Africa, in fact almost coming to an end. We've got Discovery out with results tomorrow, and one of the big things that have come to the fore there is a lot of talk about a national health insurance scheme, but obviously there's also concerns about whether the government can afford it. Do you think that it's a real concern when you look at a company like Discovery?
Look, I think it's a huge concern, make no mistake. It's a huge concern for companies like Discovery. It's a huge concern for companies like Netcare and Mediclinic. Anyone in the private healthcare scheme obviously has got very, very big concerns. I mean, it's not as if this NHI thing is new. It's been around for the past 15 years. Someone described it the other day as being a big gorilla in the room and no one's noticed it, Whether we're going to get much out of Discovery, I mean, because the question is inevitably going to be raised, I think is moot, because I think all the players are going to be very, very circumspect about talking about this thing. Firstly, until the actual paper has been released, and secondly, we have to have some debate on the thing. As it currently stands, I think a lot of people are very concerned about it.
How would government even roll something like this out? It sounds very complex at this stage.
Very complex, and it's very expensive as well. I mean, I think we're talking around about 200 billion rands. Now, when you've got other demands on the fiscus, such as the infrastructural boom we talked about earlier. I mean, we've got an infrastructure spend over the next 5 years of 780 billion rands. You add another 200 billion into the pot, you're getting close to $1 trillion. That is going to be an incredibly expensive exercise, and frankly, I'm not entirely sure where that kind of money is going to come from. That's a big figure in anyone's book. Even if you translate it into dollars, it's a huge figure. So it may just be that in terms of the pure quantum of this, it may have to be put on the back burner.